A trader with over 6 years of trading experience, building his reputation as a data-driven voice in the trading space.
All psychology can only be fixed through true data. If you suck at trading, it doesn't matter how cool of a person you are outside of the charts, you're simply not going to be able to trade. If I understand what my system does over the course of a couple of years, when I go through any type of periods of loss, I'm not going to result into emotional trading because I understand what my data does over the course of time.
Emmet is known for his no-nonsense mechanical approach in simplifying complex market dynamics,
showing how consistency, emotional control, and discipline separate the winners from the rest.
How often are you taking a trade?
I will almost always find a daily setup.
I'm sure some days are higher quality in terms of they're in a zone where there's a high probability of reversal. Other days are in no man's land. What are you doing to overcome higher time frame zones?
So my most optimal trading days, like you said, is simply when people journal their emotions and such. Like, oh, I was feeling terrible today trying to hold for a 1-to-1, and then a month down the road, it's like, okay, I feel better holding for a 1-to-2 type of thing. You're never going to go back to that data and do anything about it. Cold hard facts, just what time you took the trade, what asset you took the trade, what was the outcome of the trade, and where did that trade go before hitting stop loss. If I'm a 1-to-1 trader now, but all my trades go to a 1-to-5, I should probably start holding my trades for a 1-to-5.
So we've spoken about RR, we've spoken about risk, we've spoken about profit-taking systems, but in terms of just longevity, how long it takes to learn, the highs are easy to see. Social media is a highlight reel and payout certificates, we see them all the time, but what is a dose of reality?
I think just...
Ladies and gents, welcome back to another episode. I'm joined by Emmet. He's come in. Thank you for flying in, bro.
Of course.
So we've just spoken off camera, and there's a few transitions that happen in your life from moving from Forex to futures, and used to be prop firms, now no longer. But I want to kind of speak about what made you the trader that you are. So starting off with Forex trading, what was your views in the market? What was your strategy? What was your approaches?
My approach to becoming profitable, or just simply getting in the industry as a whole?
The specific technicals, the strategy beliefs, the scalp swing, whatever you were doing that worked.
When I first started, was with iMarkets Live, which I'm sure you've heard of as well. So everything I was learning was more so retail, support and resistance breaks, trend line breaks, not much to supply and demand and such. And so when I first started, first of all, I was a lot more heavy on marketing than trading itself. So once I got to it, more so, from one thing to another, but a ton of data got me to the point of volume trading, which is just time aspect, so simply trading during session open and taking very minute breaks, very small moves with a very tight stop loss to get to profitability. So I think when I first started out, just trying to deal with supply and demand and such to this point, the reason why I transitioned is just quickness, man. I want things to happen very fast. So trying to, I guess, take multiple positions and take a course of a couple hours to get to the point I wanted to be didn't work for me. It started to result into emotional trading. And so the quicker I was with my entries, the better I found success within it.
You started off with the EU, the GU, that's the base?
EU, GJ, GU, and US 30 is where I started with.
Okay. And let's walk through your typical routine pre-market. So you have these 4 or 5 assets you want to trade. How did you decide which one to trade today?
Yeah, so everything against the US dollar. So not that I use too much correlation, but obviously when you're viewing multiple charts against US dollar, EU, AU, and GU, I found correlation as to where I want a price to go from that point. But the reason why I transitioned again to just indices now is just way quicker trading. When I sit into a trade for a couple hours, it again results into emotional trading. So I do characteristics that keep me out of the green, pretty much.
When you say things are quicker, more volatility, in other words.
More volatility, yeah.
You go to your TP quicker, but you can also hit your stop loss quicker. So does it kind of cancel out that you have to adjust, you have a bigger stop loss, but then you do have more take profit, but then the risk reward might be similar? Or have you found benefits in trading the indices?
Yeah, just more so indices with volume, and another transition to trading support resistance and breakouts using Forex. I would wait for candle closures because a lot more fake outs, I guess, is what people call it and such. And indices, there's no candle closures. As soon as session opens up, you break above a support or resistance with any type of trend bias, market is going to go to your TPs or stop loss right away within a couple minutes. So again, just within my emotional trading and such, that was the quickest way for me to be able to execute and stay in the green.
I really like what you said of catering your strategy to your psychology, because I think people try and do it the other way around, where they're like, this is my strategy, I have to make it work, and then they try and solve their emotions afterwards. But as you said, if you feel like you're someone that needs quick feedback, don't swing trade. And then you can be kind of that session trader and know if you're right or wrong quick. Another person might be like, I don't want to lose in 10 seconds or 3 minutes, whatever. But for some people, it works to their advantage. So what things are you doing in your strategy that have helped your specific psychology?
Yeah, so everything stems from my data. Any type of psychology issues I've had in the past was just simply a result of not having enough data against my system. And so you do things like over leverage or over trade or trade different assets just because you don't know what your system does over the course of time. And so everything I'm telling you as far as transitioning from London to New York or transitioning from waiting for candle closures in Forex to now in indices not waiting for candle closures is a result of data I've had over the course of a long period of time to make these decisions.
How long were you trading or profitably trading in the Forex side before this transition?
About 4 years. So from me transitioning from Colorado to Florida, about 4 years. And when I say profitable trading, not anything crazy. Like I always see a lot of people state, flipping 500 to 50K or things of that degree. What's helped me with my psychology is being very consistent with my data. So I've never flipped anything as far as a couple $100 to a couple $1,000 and such. It's always been having a bigger account because I had a very good job before I came into trading, and progressively risking anywhere between 2 to 5% throughout the entire course of a month and such.
So when you had something kind of working for you, the 4 years of experience, data, routines, everything, to then transition and change, your routines, the things you trade, the time of day you trade, did you not feel like as you're approaching that transition that if I don't want to broke something, so I don't want to fix something that's not broken?
Yeah, kind of. But, when I moved from Colorado to Florida, I had a really bad transitional period anyways. I don't know if it was just starting a new session or potentially, I was trading the same things, but just trading a completely new session in a new home. And now I'm not using my job to pay my bills with trading. It was just trading. And I had a really bad period where things went very bad for me. So I think anytime I go through a losing streak, and for anybody, I always just go back to foundation, which is data. That's what brought me there within the first place. So understanding that, kind of coming back to foundations, but switching to New York, like I said, just switching to indices helped me out by just having a lot quicker moves. My data aligns with it, so I kind of stuck to that point.
What does data mean to you, and what are you looking in data?
Data is everything to me. I know when people speak about psychology and how to fix psychology, we talk about things outside of the charts you need to do to become a better person. Sure, I agree with that, but I think if you suck at trading, it doesn't matter how cool of a person you are outside of the charts, you're simply not going to be able to trade. So all psychology can only be fixed through true data. If I understand what my system does over the course of a couple of years, then when I go through any type of periods of loss, I'm not going to result into emotional trading, which is over leveraging, over risking and such, because I understand what my data does over the course of time. So to answer your question, what data means to me, it's just sticking to one foundation, which is for me is support, resistance, and volume. And over the course of a long period of time, having that data pretty much speak for itself. There's many minor nuances. Like, for example, if I'm a 1 to 2 trader, let's say for all my trades, I hold for a 1 to 2, but I go back and I said I took 100, 150 trades. And I go back to these 100, 150 trades and say, well, more often than not, does my trade go to a 1 to 2 or does it go to a 1 to 4? And if I can answer that based off of real trades, of course, the confidence I have in the psychology behind that to start to execute for a 1 to 4 is going to be through the roof. So data for myself speaks for everything that I do.
It's so interesting, and I love the way you worded it. It resolves all psychology. I had the same thing where I was taking partials based on levels that I saw, and it might be new structure, it might be a Asia low liquidity, and I'd have 5 levels on my screen, and depending on the day, I would pick one. And sometimes it worked, sometimes I pinpointed it by coincidence, sometimes I got it horribly wrong, and or I let a nice risk reward reverse on me chasing another level. And then I went back to the drawing board and I just did that. I looked at my data and I said, okay, over a large sample size, where would be in theory the best place to take a partial and a full volume? When I arrived to my answer, then the next time I was in a trade, I didn't hesitate. I didn't think, okay, but I could hold it a bit further, because I knew maybe on that day it might be better, but overall it won't be, because my data showed me the best place was 1 to 3 and 1 to 10 in my case.
It's a game of probabilities, for sure.
How did you transition to like information, courses, Confluences, videos, and all this data of ideas to actual data of, no, this is how I connected my ideas to trade setups to actual results, that data over here? Because people can maybe confuse data as one thing or the other.
Especially if it's skewed data, especially if you're getting data based off of emotional trading. And that's why when I tell people, when you're starting out, in my opinion, to become a profitable trader, you need to be as mechanical as possible. Just simply, if XYZ lines up, take the trade. But if XYZ doesn't line up, then simply don't take that trade. And over the course of time, there's minor nuances you'll find within your system to excel to different levels and such. But at its core and at the beginning, at least for scalping and the way I trade, it's just simply a game of probabilities. And so trying to find an edge in a way for those probabilities to speak in your favor. One thing I want to speak about, just over the course of time being such a mechanical trader, I find myself even now, even going to New York session, even finding indices instead of waiting for candle closures and just waiting for the immediate break and such. These things are really tough to teach. You know, it really depends on just having a ton of experience in the markets to start to trade intuitionally, I guess is what I'm saying. But when you start becoming profitable, I think a mechanical view of the market is the best way to go about it.
Would you say now you are still as mechanical as before? Or you allow your intuition voices?
I don't think so.
Okay.
I think I got a lot of intuitional trading that I can't necessarily teach to others, I guess. Like I said, it just takes experience. But no, there's multiple things that I see, even though 90% of it lines up with my system, and I understand my system is what keeps me profitable. There's many trades I would take that are not within that mechanical view that I potentially wouldn't even have taken, a year ago.
Do you think that's the right approach?
I'll be honest, I know when I get a little too wild with the intuitional stuff or I go to a rough losing streak, I always result back to what kept me profitable in the first place, which is the foundation. So sometimes when we go on a couple losing or winning streaks, you win 5, 10, 15 in a row, I find myself wanting to be so correct that even though I know that I should be holding for a 1 to 3, we'll get to a 1 to 0.8 or 1 to 1.2 because I live stream every single day and I want to take that win. So I do. And big dubs in the chat. And but again, when I do go through periods of loss, I will always revert back to higher risk to reward trading in my foundation, which is support resistance, trading the exact same time, trading the exact same setups and using the exact same assets.
I want to take a moment from the episode to remind you of Alpha Capital, a long-term sponsor of the show, a leading prop firm in the entire industry, and in the last year they did over $50 million in payouts. That's why they are a top-ranked prop firm that's been around for years and is not going anywhere. And with the multiple step plans they have and the multiple packages that they have, there is going to be something catered specifically to your needs at the most competitive pricing. And because we have a long-term relationship with them, we are able to bring you a massive discount of 20% off all evaluations. So click the link in the description or use the code TOT to get 20% off all your funded accounts. Working with the best prop firm in the industry, Alpha Capital.
Why is time of day important for you?
Time of day is important for me because of my stop loss placement. I don't use a stop loss based off a structure. I use a stop loss that's set. And so in order for me to get the best chance, I guess, in this game of probabilities, only trading breakouts during a period of the most volume is what's beneficial there.
What do you mean your stop loss is set and it's not a
stop loss is set. So for a US 30 for the most part, unless the average range is crazy like lately with volume, is set at 30 points. And so I don't ever have a variable stop loss with any trades I take. I'm simply just playing the probabilities of volume pretty much.
So it doesn't matter where the support is or the internal structure is, it's just 30 pips?
Correct, yes.
Or points. And why 30?
30 points because the ATR, which is the average true range within the market, usually sits between like 20 to 50 on US 30. And so if you think about it, if I'm within that range of the last like 15 to 25 to 15 minute candles, then if price goes that much further beyond that point, then I'm probably incorrect with the trade. So I just really closely look at that ATR when I'm taking trades.
Interesting. And is your profit also based on ATR?
No, just very mechanical. So usually a 1 to 3 with every trade, which again, until we get to bigger winning streaks and such, I definitely will kind of bring that back because I want to hit the win. But more often than not, with every one of my trades, I'm trading 1 to 3.
So you're risking 30 to make 90 points.
Correct.
And does that kind of mean if the average daily range is, what would be the average daily range in something you're trading?
The average daily range lately has been insane. So
the thing I'm trying to understand more is like, are you able to get your 90 if it's going in your direction on the same day? Or does it kind of trip over to the next day?
No, everything is always within, 5 minutes to 2 hours max, brother. Always.
Okay, so whatever the average daily range is, it's a lot larger than your 90
Absolutely,
target.
Yes, correct.
Okay.
Mm-hmm.
Do you feel sometimes then you're kind of only catching a small piece of what could be a larger move?
All the time, of course. Yeah, we're always leaving money on the table. And that's where just going back to data doesn't cause me to do any type of emotional trading where I'm holding a bit too long or holding a bit too short. But yeah, so all the time I leave money on the table. And to be honest with you, transitioning right now myself to trying to figure out how to hold trades longer, but it just takes time. Like I said, data is speaks for everything I do.
Why do you want to hold trades longer?
Because I want to be the best at what I do, honestly, not saying that what I do gets boring over the course of time, but having such a mechanical edge within the markets and kind of starting to get better at my craft, I guess, over the course of time, that's just kind of the next step that I want to push towards,
And it would be the idea of leaving a runner, like a small piece of your volume. Is it kind of
No,
after your level trail, you'll stop? What ideas are you thinking?
More so holding the entire position. I'm not a big guy on partials and such, so it would be more so like a trailing stop loss, if we create new structure on lower time frames, just traveling up those structure points until it breaks it, type of thing.
So your 1 to 3 is not a partial. That's 1 to 3 usually is full.
Yes, correct.
Full volume.
Yeah.
So no matter what trade you've taken, if it could be a swing, if it's a daily points of interest, it's always a 1 to 3. Why have you chosen that approach?
Yeah, so over the course of time, I have 4 years now. So I've been live streaming for almost 4 years now in front of everybody, every last one of my trades. Every day.
For
5
4
days a
years.
week.
Incredible.
Not every day, but most days.
Yeah.
Okay.
You're a human in the end.
I'm a human in the end. And I also truthfully took like 8 or 9 months off just to enjoy life and not be on the camera every single day. But you can only imagine over the course of 4 years, potentially hundreds of trades at this point. More often than not, all my trades go to a 1 to 2, but I make the most money by holding for a 1 to 3.
Most go to 1 to 2, and some go to 1 to 3. Why not do something at the 1 to 2 mark? Because those 1 to 2 then end up break even. Or what do you
just break even? So 50 points. So I tell you I have a 30-point stop loss. Once we get up to 50 points, which is almost a 1 to 2, I just put my stops to break even. Very, very mechanical with it every single trade.
And all those trades that ended up break even but kind of went into some sort of good profit, unrealized P&L, a bit of a hole in your system. What is your thoughts on leaving that money on the table, searching for the 1 to 3? Because I know the flip side is that, well, why not take it a 1 to 1 then? Like, why even go for the 1 to 3? So there's never a perfect answer, but it's kind
never
of like
a perfect answer, right?
It's a bell curve, but because it's exactly the thought process I had about a year and a half ago of like, okay, if I bring it closer in, might take profit, then I guarantee something.
Sure.
But then my risk reward will be less, then my win rate needs to be higher. Like, it throws off all the numbers. But then if I go for too far of a risk reward, then I'm leaving too much money on the table because it might reverse on me. The sweet point, let's say, you found it as the 1 to 3.
Yeah, I just think all that potentially is emotional trading of just hoping on potentials instead of some type of set system, which again, having the experience now, I think I can reach those levels of holding things longer. But what brought me here in the first place is mechanical trading,
What is your views on risk in general in terms of if you have a great setup, an A+ setup to size in, or is it always standardized 30 points, same risk every time? What is your views on risk?
Yeah, it's interesting. So I'm a Confluence trader. So I do have an A+ setup and I guess a D setup or so, but I don't allow myself to take a trade outside of 3 Confluences or less. So all my trades, I guess, are C+, A+ setups. And as far as risk, I don't have variable risk. I think I simply just trade within my system. And like I was just telling my students, I've been risking 2K per trade almost for an entire year until January of this year. Pretty much end of January, I upped my lots to trying to risk around like 2,800 to 3K per trade. It took me an entire year.
Okay.
I meet a lot of traders within the space now who've done wild things. They brought 50K to a couple $1 million and things of that degree. I've been consistent for multiple years. I've never had my big push, and it just makes you wonder if a lot of these guys are that good at what they do, or they potentially just had a really good streak for a couple months and throughout the course of long term.
Longevity, yeah. One of the worst feelings as a trader is investing hundreds of dollars in a prop firm, earning your way to a payout just to get scammed by the prop firm. And I'm sure most of you are tired bouncing from website to website, not knowing who to trust, what are credible sources of information, and what are just marketing campaigns by these prop firms to trick you into spending your money with them. And that's why I'm proud to bring to you a partner of the show that is Prop Firm Match. Now, Prop Firm Match is a complete and comprehensive, trusted comparison website of all of the prop firms in the industry, where you will have verified reviews of real traders who are actually customers of the prop firm. And inside the website, you have multiple filters so you can categorize the search based on your own trading style, based on what parameters are useful and preferred for you. But beyond just that, Prop Firm Match has the best discounts in the industry for each listed prop firms, so you can get everything that you need in one place. So go ahead and click the link in the description to research the best prop firm for you and find the best prop firm discounts in the industry. I'm noticing that your 2K risk, it was at sometimes an X amount of percentage, but as your account grew, you didn't bring up your lot size. So then your relative risk was not growing with your account size. Do you not believe in percentage risk and dollar amount risk only?
Compounding and such. No,
Yes.
because I always come back to base. So whether I have the 30K or like 50K right now, I try to bring it up, 70, 75K, and then come back down to base. So I'm always sitting at 30 or 50 with my account.
I mean to say, what you're often withdrawing your profits.
Correct, yes.
Okay. How do you know when to pull out profit in sense of, how do you know it's your money now and it's not going to go back into the hole versus leaving a buffer because I might have a losing streak?
Yeah, So every time, always sit at pretty much 50K baseline, and when I withdraw, I leave like 3 to 5K in there, and then that's kind of my buffer, so I can lose the first trade or two and not feel like I'm directly back in a drawdown. But how do I know? It's actually a bit variable. I mean, I don't do it on a monthly basis. Sometimes I'm withdrawing every week, depending on what type of good week I have. But anywhere between just that 10 to 30K mark is where I'm comfortable at when I start to remove profits.
Let's jump into a bit of technicals and exactly how you execute on your trades.
Yeah.
First of all, how often are you taking a trade?
Every day, yeah.
You will find a daily setup.
I will almost always find a daily setup. I would say I trade 4 out of every 5 days every week.
But this is across how many asset classes or how many tradable pairs?
US 30 and NAS, that's it.
Okay.
So I have both of them up on my screen. I have NAS on the left side and then US 30 on the right as a split screen on TradingView. And I'm looking at them the entire time. I'm not flipping in between assets.
And it's
anymore.
only the open, the first, let's say, hour of the session
That's it.
open. Okay, so how do you know, like, because I'm sure some days are higher quality in terms of they're in a zone where there's a high probability of reversal. Other days you're in no man's land and there's not much to the left.
Sure.
But you will still find an opportunity daily. So what are you doing to overcome higher time frame zones and so forth?
Yeah, so my biggest confluence is previous session highs and lows. So very first thing I hop on, I'm going to 4-hour time frame and trying to see if we're reacting off of a big area of interest. Once I figure that out, I'm immediately going to lower time frames and seeing what's going on.
Is that first one just for bias?
Just for bias.
Overall direction.
Yeah.
And you will only trade in that direction or you will counter to that?
I will counter with multiple confluences. So let's just say price was bullish and I went to 4-hour time frame. We're currently reacting off of a 4-hour support as well. When I go to lower time frame, and I mean this, as soon as the market opens up, the most immediate break out of the most immediate 5-minute resistance, I'm taking it right away. That is my confluence.
Oh, okay. Meaning to say the session's open and right before the session open, you had a M5 higher. Oh, sorry, let's say higher high, higher low, higher high. So you just got a small M5 push. And then if it breaks up or breaks down, either way, you're executing on that.
I'll execute on the buy because we're bullish in higher
higher
time
time
frames,
frame,
but
okay.
bearish, yes, I want additional confluence to see what's
And
happening.
then you have the 30 pip stop. So even if it doesn't reverse from there, you got time and you got space for it to breathe, let's say. And the break even is at the 50 points. So you're not, let's say, waiting for the impulse first and then following your stop.
I'm taking the breakout for sure.
Okay.
And there's a caveat. So if let's say we're bullish again and breaking above that resistance, if that is at previous session highs, I'm never going to take that trade. I think a major part of my system is understanding what's going at those previous session highs. And I like to speak about it in this manner. I mean, wherever that previous session high and low is at for the most part, let's say it's London session, all sellers from London session, more often than not, their stop losses are very obvious places, which is sitting at highs and lows. So when we come up to those points, like let's say that high there's multiple things that are happening. 1, breakout traders are getting into the market. 2, there's a lot of stop loss that are being violated. And then 3, a lot of liquidity traders that, the sell orders that are sitting up there are hopping in as well. So a lot of time that results in a ranging market. The market is indecisive. And so from that point, if we start to break back in the range, that's a good indication we're going to continue on to previous session lows now. But if we re-break that high that was just formed when we violated previous session highs, it is go time for me. That is my bread and butter setup. It's just taking a violation of previous session highs and the re-break of that violation is my A+ setup.
So let's say 4 hours bullish and then you got previous session high and low. Because it's bullish, you're more interested in the session low. And you're waiting for the session open to sweep that low. And then once it breaks back into range, you're buying through to, let's say, previous day high.
And also vice versa, I like the failure of that liquid grab as well. So if we were to break above previous session highs, push back within the range, and then re-break that high that was that first violation, that's a bread and butter setup as well.
To then buy again.
So my most optimal trading days, like you said, is simply when I'm sitting in between previous session highs and lows. If we're not there, let's say we opened up New York session and we're well beyond London highs, to me, that's just simply the market has picked its direction for the day, unless there's a higher time frame resistance that we're sitting in. And so I just want to go with that bias pretty much only.
Oh, so that's interesting. I completely understand the session low, wait for the sweep, and then use that with the session open to drive up. But you can also do it on the session high. So even if it's kind of pushing out there, do you not feel like sometimes you could sweep the session high and then kind of go lower, and kind of do that session reversal based on the liquidity of that session high?
Exactly. So I'll never take the break of a higher low, regardless of what bias is on higher time frames. I'm waiting for that violation and then a re-break to take the trade.
Okay. So that lower time frame manipulation gives you the confidence
Correct.
to get
Yes.
in.
Yes. Correct.
And have you ever considered just putting your stops around the immediate reaction and not just 30 pips, 30 points?
Yes. So just speaking about the ATR, my ATR is a 15 period on 5 minutes. So pretty much saying the last 15 5-minute candles, that's what that true range is. So
Got it.
I've thought about collecting data of sweeping that higher low and just putting my stop loss as that ATR and expecting it to go the opposite way. I haven't acquired enough data on it yet.
Fair
But
enough.
I've thought about the same thing. Yeah.
It's interesting because I've spoken to traders that are doing very similar, but they kind of pin their stops around the local reaction, and it's a quick TP or it's a quick stop loss.
Quick,
But
yeah,
you're giving the breathing room to allow things to play out. And it's just interesting because I haven't heard it in this way, but it is making a lot of sense because you're just playing directional trend. So if it doesn't reverse in your moment, throughout the day, if you got direction right and the things are lining up, it would naturally gravitate towards that at some point.
More often than not, everything is just a game of probability.
Yeah.
So, yeah.
How do you utilize trend analysis? Because trend is obviously just higher highs and higher lows, for example, but daily might say one thing, 4 hour might say another, M15 might say another. So when you have conflicting reads, which time frame trend is the one to follow?
1 hour. Yeah, so 4-hour time frame is for support and resistance, areas of interest that we're reacting off of with major moves. But 1 hour is where I go to actually see are we creating higher highs and higher lows or lower highs and lower lows.
Okay. What is it about the 1 hour specifically?
It's just quite closely correlated to 5 and 15-minute time frame, but it's still also it's still a king time frame because it's higher. 4 hours is a bit too broad, going from 4 hour and then trading on 5 minute to me. But again, if we're sitting in a 4-hour resistance that in the past we reacted 1,000, 2,000, 3,000 points from that area, I'm a firm believer that the left predicts the right. So potentially just not going to take a trade in that area until we break beyond it or reject the opposite way.
So I want to speak about something that's a little bit different, which is I've had a lot of traders on the show who had kind of a come up or a difficult path to trading in the sense of they were in debt or they had a failing business or they, the rags to riches kind of story. Your case is more you had a high paying job and a lot of these traders end up back against the walls, go through a bit of debt and really just a bit scary, let's say.
Yeah,
how much of just looking back, how much of an importance did that income that you had that you didn't have to pay your bills from your trading? Do you think that was something that really assisted you?
Yeah, of course. Especially when I first started and I didn't have an edge. I was just down to gamble and lose all my money in hopes that, all it takes is one trade and you're good to go. So I didn't have any frustrations or wasn't able to pay my bills. I had to get credit cards in order to get prop firm accounts and personal account to any degree. I was already making 6 figures as a plumber when I started getting very good at trading. I mean, I started as a mover when I got introduced to trading, but although I tell people I was in the markets for 10 years, I didn't take anything serious till about 5 years ago, But a huge thing, I always tell people who are looking to leave their job that it simply just takes a lot of time because once you leave your job and you cut off that income and all the respect is on trading, at least for myself, I just so much shit got thrown out the window as far as psychology goes, I have data for probably at that point like a year and a half, so I understand pretty much what my system does over the course of time, but like when you got to pay bills and you had a bad couple weeks and I didn't have enough money saved up, shit's got to happen, So I start to really do some things that potentially make me not be able to pay my bills. But even with that being stated, my girlfriend, which I appreciate her and shout out to her, helped me with a ton of stuff back then as well. So I just never dealt with massive pain as far as losses that were debilitating to my career. Everything was always a progressional, slow grind for sure.
So a blessing, of course, but with its own challenges too, because you now have a constant decision to make where if I want to leave my job, I'm walking away from consistent, stable, large income. How did you decide when is right to leave versus you're only trading session open, you can kind of balance it and kind of do both for as long as you wanted. how did you navigate that? When's it right to leave? Because people usually say, when I got 6 months saved up, I can leave my job. But if you got a opportunity cost of 6 figures, you got to make that in your trading and then some to even consider leaving your job. So how did you decide when's right to leave?
Well, I didn't decide. My boss decided by firing me.
Oh, okay.
Is what happened. So nothing bad, but
Yeah.
I just continuously started to show up to work less and such. I started doing what do you call it, guruism at that point. So I'm teaching other people how to trade and such. And so I just stopped showing up to work as much, you know.
Okay.
At my last 2 years of the job, I was doing more sales than plumbing itself. So I was selling plumbing systems and for Roto-Rooter. And I sold over $1 million for them those last 2 years I was there. So they really let me do whatever I wanted to do as long as I continued to perform. And then once that performance started to die, I was like, look, dude, are you going to come to work or not? I was like, yes, you know, but I still stopped coming to work. So ultimately I got fired is the reason why that stopped.
I mean, your hand was forced in the
Respectably
end.
fired, though.
Yes,
you know,
yes.
I could go back if I needed.
Fair enough,
I've
fair
never
enough.
got fired before, so I just want to put that on record.
That was interesting though, because you kind of allowed it to fizzle out, knowing that you have the job security and you're kind of playing with the line, because that income is something that can pay your bills and pay for your life, and then
Yeah.
trading is just on top. With regards to just in general capital, like a lot of people are just all about prop firms, and there's usually because traders are coming from a place of not financial means to fund a live account. You're in a situation where you could have picked either path, personal capital from your savings or a prop firm route, and using your income to be able to be a bit more aggressive with the prop firms. What route did you choose?
Well, I chose prop firms at first, and that's the whole reason even why I'm here today and why I got connected with so many traders and such is I got almost a 10K payout from FTMO 4 or 5 years ago. I boasted about it on a buddy stream and then started streaming every single day. So that was kind of my entry into all of this and such. But
What do you mean almost got a payout?
no, I did get a payout
Okay.
from FTMO, and I was boasting about it on their
got it.
stream. So that's how I hopped on and started streaming and such.
Got
Yeah.
it.
As far as sticking with prop firms, you know, like we were speaking about earlier, the barrier to entry to get payout to get money within the markets is like this. So the higher barrier to entry, the easier it is for you to get money out of the markets, and the lower the barrier to entry, the harder it is to extract money from the market. So at the top part is personal capital. Obviously, way higher barrier to entry. You have to put your own personal capital in. So if you want 100K, you have to put 100K in. But it's way easier to extract money from the markets because you simply don't have any rules. There's no daily drawdown, trailing drawdown, anything to any degree. And then secondary is Forex prop firms for me. So way lower buy-in. You know, you can get a 100K account for $500, but it is tougher to extract money from the markets because there's more stipulations and rules. You have daily drawdown now. You have max drawdown and such. And then the hardest way to get money out of the markets, in my opinion, is futures prop firms. The lowest barrier to entry, you can get a 100K account for $100, $200, something like that. But it's really, really tough to extract money from the markets because now we're adding in trailing drawdown and all of these rules to make it just even harder and harder for you. So although it looks very good that you can get 100K within $100, some people just struggle to keep such tight dynamics within their trading. But in reality, you know, especially with Forex and futures prop firms, you've only lost 10% of the account and it's gone, and it kind of messes up your mindset. Versus a personal account, you lose 10, 15% of the account. Yeah, that's rough and we really need to get it together, but you still have 85, 90% of the account before it's actually gone. So I think if you can't perform within prop firm territory, you probably can't do so within personal capital as well. But I think people put so much respect on those accounts, and they're very tight parameters versus actually trading with personal capital.
Yeah, I agree. And especially when each prop firm has its unique rules and conditions to meet, you can just some people accidentally blow an account and they realize, oh man, that was the rule for this one, not that one.
Let's try it again.
And then they go again because that is just a couple $100. But in the flip side view, which I agree, like you don't have the rules to play with, so you can trade as you want and you can really express your strategy in the way that you want. But on the flip side, the emotions are a lot higher because that's your money, it's your hard-earned money. You go into drawdown, you got to climb yourself out. There's no like reset buying out their accounts. So do you think the payoff of the rules you have to follow with prop firms is still worth it because your real risk is just a couple $100? If it goes wrong, that's fine. You can buy another one, but you know that couple $100 can turn into a couple thousand. You know, with the right payouts and account size. Is that a route that is still worth exploring?
Yeah, absolutely. I mean, if you don't have 100K to put into an account, but you want to trade a 100K account, there's simply only one way you can do it. You know, I just think, like I said, just a hindrance on so many people because they're stuck on such tight parameters when it's not nearly the case with personal capital. But again, if you cannot thrive on prop firm accounts, then I simply think you can't do so in personal capital as well. It's just a lot tougher.
Do you think it's more just a dream to say, I'm going to trade prop firms, get as much money as I can, and put it all into a live account? Is that a realistic path?
Yeah, I mean, that's one thing too. At some point, I would assume that all traders want to transition from prop firm accounts to personal capital. Why pay somebody 30% of your capital when you don't have to do it and we already have to pay capital gains tax and such like that? So I would assume that's everybody's goal in the first place, which means we're going to have to cross that path of gaining those emotions to be able to risk our own capital on every single trade. And so if you can start now and not go the prop firm route, I just think, again, at some point you have to hit that crossroad to get those emotions, so why not start now? Just like some people like to teach trading a lower RR at first and then building your way up to a higher RR, and these things simply just don't make sense to me. It's like, well, if you want to be a 1-to-3 trader, why are we getting emotions to be a 1-to-1 trader type of thing? You know, like get to it now so you obviously can get to that point. And again, we simply can't beat math. You know, a lot of people speak about trading for a 1-to-1 and such, and simply just pulling money out of the market, like you said. I leave a lot of money on the table and such, but we simply can't be math. You know, through periods of loss or not doing too well, I only need to win 35% of the time for me to be profitable. Versus those 1-to-1 traders simply have to be right a lot more. And more often than not, you know, and I'm very impressed with this, the past 4 years, at least for my signal channel, I average anywhere between like a 60 to 75%. But I have down periods. There's definitely months where I'm trading at a 40, 55%. And the only thing that's going to keep me profitable is higher RR trading.
When you see the prop firm stats, then sometimes they're a bit, you know, clouded, but the ones that we can, let's say, almost trust, I'm specifically referring to the MyForex fund fraud case collapse, and their numbers were revealed. If I'm not mistaken, the amount of people that reached funded and then payout number one was something like 4%.
0.04.
Okay, 0.04. It was payout one or payout two, but either way, ridiculously low. Ridiculously low. In terms of 100,000, it's a handful of traders. Why do you think, even though it's so cheap and accessible, and the numbers, the math don't lie, the risk reward, win rate, all of these things make it seem so easy, but why are the numbers saying something else?
Yeah, I mean, to be honest with you, lack of information for a lot of people. You know, like I said, I stream every single day, so there's multiple people who I speak these facts to, and they're just like, eyes are wide open. Wait, what are you talking about? I had no idea. So a lot of this is simply lack of information of people investing into things. You know, I get a lot of people messaging me about certain rules for prop firms and such after they've already invested the capital to get the challenge account. So it's like people need to do their due diligence, and I think that will alleviate a lot of that. But it's just like the casino. People are going to continue to go to. I think you can have an edge in the casino as a poker player, and you can also have an edge within trading as well. But most people simply don't treat it as a probabilities game and risking their edge. It's just, man, if I put $500 in, I could potentially make 15, 20K within a month. It's a no-brainer. I can't get this anywhere else. Let's go ahead and do it. So
I think it speaks to the mentality of traders. I sometimes watch someone's YouTube video on a chart analysis, and I read the comments, and I'll see a guy who's like, I just bought a 100K account, 5% down, can I buy your course? And I'm like, should have done it the other way around. Like, don't look for the information when you're already in the hole. But, you know, I think it's the mentality of, you know, trying to get rich quick, or it seems easier than it may be. Let's get into just expectations of a trader. So we've spoken about RR, we've spoken about risk, we've spoken about profit-taking systems. But in terms of just longevity, how long it takes to learn, appropriate time to learn, what it really takes. For some people, like, I was backtesting 17 hours a day, and you know, everyone has their, and you're one of them too. So what is kind of the realistic journey of a trader? Of the highs are easy to see. Social media is a highlight reel, and payout certificates, we see them all the time. But what is a dose of reality?
Dose of reality. All of us, every tactic that I teach and everybody that I've met as well is just pretty much regurgitated information from others as well. None of us created these things. So I think just getting to a set foundation and acquiring data based off of that instead of outsourcing to try to get as much information as you possibly can is what brings people to actually becoming profitable. I think, like I was telling you, the first couple of years of kind of messing around with trading and such, I didn't feel like I was messing around. I was just simply trying to acquire as much information as I possibly could from as many different people as I possibly could to get some type of master strategy. But what I was really doing is playing probabilities of multiple different traders and not focusing up on one thing. So when it comes to myself, I mean, again, I didn't curate my system as far as support resistance goes, but all of these minor nuances and speaking to you about previous session highs and lows, even though these aren't new tactics, I genuinely came up with this myself through back testing hours and hours and hours and just coming up with minor little nuances within those trades, you know? People don't want to hear this, but in my opinion, I don't think you can become a profitable trader within a couple months, more often than not. There's outliers and such, but I can teach you exactly how I trade. But the way that you apply it and the emotions you have behind it are going to be based on your own data and your own risk parameters and such. And
especially if you how you define profitable, because someone can just get a payout because they just caught 2 winning trades at the right time, and they might be a losing trader, and it just got a bit of a high, and it gives them that self of confidence.
Time to quit the job.
Exactly, and they make silly decisions like that. But let's put some words to it. How would you define someone that is a profitable trader? What is their behavior like? What is their performance like? What is defining as a profitable trader?
Yeah, just unforgivable confidence in what they're doing every single day. I know exactly what I'm looking at every single day I go within the markets, and if there's some type of discrepancy or something I don't understand, I'm simply just not going to invest. So every trader that I know who does very well for themselves, and you ask them to break down a chart, there's no like, oh, markets are not looking too well right now, I'm not too sure as to what to look at. We know exactly what we're looking for. We know exactly the routine that we're running towards. Everything's predefined. The time that we're trading, the setups we're trading, the assets we're trading, and I don't see people deviate from it. And the people I do who've had results before, I think they've just had a couple good runs and are able to show things for it. But as far as longevity goes, I've seen so many people fall out of the game just from simply having a good streak or having a good flip, but never being able to repeat that again, you know?
You said you've been in the markets 10 years, but the first 4 or 5 years you kind of write off. But in those years you mentioned you were kind of like a sponge, learning from everywhere, trying to get all the information that you can. But you still don't consider yourself a real trader back then. But I do think that's what most people do right now. They're like, let me learn from everyone. Let me piece it all together and figure it out myself. Would you therefore kind of say the better route is pick one person and learn everything they say, as opposed to try and learn everything and try and add your own spices to it and combine things and hope you have the experience to figure it out?
Yeah, but you have to enjoy the person that you're learning from. You know, like I always say, even though I don't know it, if you want to learn from me, I have to be your best friend. You have to really enjoy the way that I speak, obviously the way that I trade and such, because if not, you're just simply going to fall off. But you can, of course, come up with your own system and your own data on your own. It's just not going to be expedited, you know? I think from learning from a mentor, you just everybody has problems when it comes to getting to some type of solution to becoming a profitable trader. But when you don't have somebody to guide you, that problem takes a very long time to come up with a solution versus yourself. Let's say you were newer and you're having a problem with holding your trades. I have a solution for all of that, of course. And so you don't have to go down the path of all of these crazy backtesting sessions, and especially backtesting trades you may have potentially taken instead of actual trades you've taken, which I don't think are of much benefit to you. Things just take a very long time. So yes, if you're actually able to listen to the solutions to these problems that you have and you enjoy the person you learn from, I genuinely believe somebody could become profitable within 6 months. Anything before that is an anomaly, and
it's an anomaly, yeah.
It's an anomaly, yeah.
I finally have a special offer to share with all of you from the US or my futures traders, which is over 20% of the listeners of the show. And that is Alpha Futures, a leading futures prop firm that is working with Trader8 and NinjaTrader that are compliant with CME regulations. With the largest end of day balance drawdown in the industry, a 90% profit split and same day payout. And with the most competitive pricing in the industry, with accounts starting at just $79. On top of that, just by being a viewer of the show, you get up to 40% off all evaluations. So why not get started with an evaluation right away, trading $50,000, $100,000, and you already know the power of prop firms and larger capital. So go ahead and use the link in the description or code TOT for the best prices in the industry, plus the best discounts in the industry to make this a home run offer if you are a futures trader.
The word you used right now was expedite. And I really like that because in the end, someone can figure it out with enough time and effort. But the whole point of expedite is you get the journey, you get the reward without the scars and the time wasted and the opportunity cost of not earning those years that you're trying to figure it out. But if I also extend that out, the word expedite, in your position where you are answering questions to people daily and you're really getting challenged on your beliefs or challenged, or maybe they're asking a question that you haven't been through, or you have been through, and then you're saying, okay, you relive the moment or you try and find a solution if you haven't been through it. So you're constantly expediting your own experience because you're by proxy with many. and also just expediting your accountability because you're streaming in front of many. So therefore, you're going to think twice and a third time before you get into a trade because you know people are watching. But if you're home alone and no one's watching, it's very easy to do that revenge trade.
Absolutely.
Because it is what it is.
And I'm on every day. You know, I
Exactly.
definitely would kick the Emmet's butt that was trading 3 years ago than now because of all these live streams.
So
and
when we take this word expedite, and there's many ways to do it with these few that I've just mentioned, but not everyone's in your position of influence and have people that are watching and listening and joining. How can someone also get a taste of that level of accountability, that level of refining their own thoughts, refining their processes without having to be in a position of an influencer?
Understanding your head once you have a certain amount of trades underneath your belt so you know what your system does over the course of time, that is all the accountability you need. But if you never get to the point of understanding what you're doing outside of just trading a system on a day-to-day basis, but you don't know what happened last month, you don't know what happened last week, you're just opening yourself up to a lot of emotional trading that's going to skew that system. So just treating it like a business. I really don't enjoy people who say they're going on vacation to trade on the plane and things of that degree. The person on the other side of that trade it's a zero-sum game. So it's either he's going to lose or you're going to lose. And if you don't show up with your best mindset and trying to execute that edge, you're potentially just allowing for a probability to start to slip away from you. So journaling every trade, showing up to that office and trying to keep everything as non-skewed as possible, just trading within that same system. Over the course of time, you're going to come up with really hard answers to these issues and start to actually become profitable. But there was no aha moment for me. You know, some people speak about some course they took or one day it was just like, oh, I understand the setup. For me, and maybe it's because I didn't have help from mentors that I had a lot of people that I watched and such, but to answer these hard questions, at least for me, it took a long time to kind of watch that gradual switch from really losing a lot of money to gradually kind of breaking even and actually start making consistent profits. And I think a big reason for that as well is I don't really do variable risk. I really risk the same amount per trade, depending on what my account size is. And I've been doing that my entire career. And in my head, that's what's kept me profitable. So you never see me wake up if I'm risking 2-3K per trade and it's like, all right, today is the day. You know, I'm going to risk 8K per trade and we're either going to make 32K or we're going to go back to zero. So that, at least for myself, just being as same as you possibly can with everything that you do, that's when you're going to acquire a good psychology because you understand everything that you're doing, and that's where you can start to get consistent results. You know, everybody can have good results or a good run for a couple weeks or a couple months, but 4 years from now, you know, do you still believe that system is going to pay for all your bills and such? And if you can't answer that question, I think, first of all, potentially not a time to leave the 9 to 5 either. You know, it's really got to be set in stone. And
because you've been in the market for a decade to you know, really intensely, or maybe at times not so intense, but you've had a lot of exposure to a lot of price action. Do you believe an edge can decay or the markets can change, and what was working today might not work in 5 years as we see AI and XYZ? Or do you think a strategy, if it's proven, if it's a carved strategy, it can stand the test of time?
Yeah, I think, it definitely can stand the test of time, but you always have to be changing and understanding that the market is changing to any type of degree. Not to freak anybody out, but same thing you're talking with AI. We have to understand there's more and more people using EAs and bots and such to trade. So over the course of time, if these bigger people actually move the markets, understand the better edges within AI and such, that could potentially change the entire dynamic of the markets because it's simply not human nature anymore. Yep. You never know, yeah. So the only way to stay on top of that curve, at least to the best of our ability, is journaling everything that you're doing and finding these minor occurrences that are potentially destroying your edge. And if you just get comfortable, which we see with a lot of traders, and they're just set in stone within their system, yeah, I mean, they may be fine for the next couple of years and such, but who knows what it'll be 5 to 8 years down the road. And so that's why myself, even being in the markets this long, still journal every last one of my trades. And I couldn't say I would still do it if I wasn't streaming every single day. So a big part is that holding myself accountable. But that is a big reason why, even if the markets were to change, I still believe that I would be just fine.
You mentioned a blue book and a turquoise book. Does that mean you're journaling by hand? And
not anymore.
Down?
Yeah, not anymore. I have
what is the most effective way to journal? To just have clarity, easily to access, easily to review things?
Yeah, a lot of friends I have people journal their emotions and such. Like, oh, I was feeling terrible today, trying to hold for a 1-to-1, and then a month down the road, it's like, okay, I feel better holding for a 1-to-2 type of thing. Those are good things, I guess, to jot down, and you'll retain it better as to where you're at. But you're never going to go back to that data and do anything about it. So I think it's there's nothing for it. Cold hard facts, just what time you took the trade, what asset you took the trade, what was the outcome of the trade, and where did that trade go before hitting stop loss. And obviously a screenshot of it so you can go back and one, make sure you're in alignment with your system, but two, more often than not, if I'm a one-to-one trader now, but all my trades go to a 1-to-5 for these past 200 trades, I mean, I should probably start holding my trades for a 1-to-5.
You mentioned where did price go before hitting your stop loss? So when you're analyzing and you're losing trade, what are you trying to get from that piece of your journal?
Just more often than not, is my trades going to a 1-to-3 before hitting stop loss or a 1-to-1 to hitting stop loss is the whole
Or
thing.
straight to stop loss. Okay.
Yeah, and the reason why I say is a lot of people journal a trade as, if they were holding for a 1-to-1 or 1-to-2, they would show that in their journal. Okay, price came up to 1-to-1 and then out. But over the test of time, if you're trying to hold for higher profits and such, how can you do so if you don't know what comes from that? And you can always go back to that trade and replay and see where it went to. But again, the easier you make it on yourself to be able to go back in time and assess this data, the more likely you are to actually do it and make something of the data that you're acquiring.
When you have a large data of, let's say, 1 year of trading and you've journaled everything, you got it organized in the way that you said with asset and time and outcome, etc. What are the key questions you did ask yourself when it's like, okay, I've got all this data, I'm gonna now review it and try and find things out of it? What questions did you ask yourself through your data?
Yeah, just the more often than not, instead of waiting for a candle closure, if I just simply took that exact break, do I get a better entry? Or more often than not, is that just getting me faked out and pushed in the opposite direction? If I'm a 1-to-2 trader right now, more often than not, which stage is it going to so I can make more money out of the trade? Taking my biggest question that I got answered is taking a breakout of previous session highs and lows. And I figured out, well, more often than not, when we violate that previous session high or low, it always gets an opposite end reaction, just pushing back within the range.
Reversing, okay.
But then once you get that re-break back above highs, that is a very high probability setup.
In that comment then, is it worth trading the reversal after sweeping a high? You trade the reversal, and then when it goes to the re-break, trading the continuation, like kind of doing
Correct.
both. Would you allow yourself to do 2 trades in a day like that, or is it whatever's happening in the open?
No, I mean, I'll take a buy and a sell on the same asset within an hour. Yeah, I don't have strict bias. It just has to be on my terms. So if we're trading within trend, a lot less Confluence is on lower time frames to take a trade than it would be trading against trend, trying to go the opposite way.
Yeah, but it's interesting, your journal opened up a whole trade model for you that you originally didn't see.
Exactly.
You saw it after reviewing your data.
And I enjoy that so much because, again, even though this is an old tactic, I'm sure many people use previous session highs and lows, I genuinely created that completely from my data and understanding that over time.
I know what you mean. You might not have, let's say, invented it, but because you discovered it yourself, which you could have found somewhere else, but in act of discovering it, you're more confident in it because you've seen it play out, you got the data, so you're less likely to mess it up in the heat of the moment because you've seen it play out, you've got data behind you. Whereas if somebody has the same information but they just watched the video, they don't have the confidence the same way you would.
It takes time. Yeah, it definitely takes time for sure.
Let's talk about a buzzword that I'm seeing around in just everywhere, which is networking. And a lot of people feel like they need to move to a big city, move to Miami, move to Dubai, be around traders, go to these summits and XYZ. Because networking will help them grow or whatever their beliefs may be. Is that something you do? Is that something you think is important, or do you think it's just a waste of time?
It just all depends on what you want out of life and such. I mean, I enjoy networking because I like to bring my knowledge that I've acquired over the course of time to others and such. I know how I felt learning from a lot of marketers and being taught things that I won't say doesn't work, but simply just didn't work for me. So coming up with these aha moments based upon real data and being able to share that with people who've been struggling for a while is enjoyable as far as marketing to others. It's nice to have people on our same level or people are higher than us to push us and get to new levels. And again, just kind of broadcast our movement. But I think it depends on what type of person you are. I don't care for the city and like going out to clubs and networking to that degree. I just enjoy having a network of like-minded individuals that are all pushing toward just being the best version we possibly can. Now
that training has brought you the initial goals and dreams you probably had on year one, which is leave my job, trade full-time, have enough capital that I don't need prop firms. Now that you've ticked off a lot of these early goals and boxes, what are the new goals that have emerged?
Well, new goals by the end of this year, starting next year. Me and my girl want to get a farm. She's a farm raised 80, so we can get like 15 to 20 acres somewhere in Tennessee or North Carolina is kind of short-term goal. But the number one goal and main goal is always just simply freedom. You know, when I first had my breakout year of doing very well with profits and such, I bought the cars, I bought a house, I bought a boat, and bought a jet ski within like 6 months and fulfilled that side. But I think over everything else, I think freedom is everything to me. So making sure no matter what, you know, throughout all the people that I have working for me now and such, just making sure I will always maintain that regardless of anything else. Freedom is always first.
So with the life I live, pretty much every single month I'm in multiple countries. So with all that traveling, what that means is I always delay going to the doctor. And you know what happens when you start Googling your symptoms or asking ChatGPT what's wrong with you? It ends up looking like that small bump is 5 types of cancer and then you need to go to the emergency room right away. And I say all of this to say that you don't need to settle, and now the world has changed. But you don't need to waste your time or delay things or drive an hour and wait in queues, because when it comes to your health and finding the right professional, ZocDoc has got you covered. ZocDoc is a free app and website where you can compare high quality in-network doctors and click to instantly book your appointments, from mental health to dental health to primary care to even urgent care, where you can find the specialist that you need at a time that suits you and take the call from the comfort of your own home, and even select filters like will they accept your insurance. So stop putting off those doctor appointments and go to ZocDoc.com/Titans to find and instantly book your top rated doctor today. That's ZocDoc.com/Titans, ZocDoc.com/Titans.
For sure.
And the last piece I want to end on, a little bit different, but I think is where the conversation is nicely going, is this word fulfillment. And a lot of traders, they get in for the money and then they quickly realize when they got the money, they follow the materialism. And then for some, it ends up really bad. And others, they go through a phase and get out of it. But I think everyone touches that fire of materialism and see what it feels like.
Kind of have to.
Kind of have to. And even if someone sits on a podcast and says, don't do it, you still will do it when you're in that situation.
Right.
But I think when you cross that initial excitement and you know, your life is stabilized, you do start to feel, I guess, and a lot of people say this of, well, I'm just home alone pressing buttons, and if you're not out networking, you're not out meeting people, you're just a lone wolf in your room trading. Sure, you might be making money, but it's not really a fulfilling life. No. What do you do in your life, maybe outside of the markets, just to have a sense of really expressing your freedom, of having fulfillment when the monetary side is taken care of?
Yeah, I just have a really solid network of family and friends, and my group is called Zen Lab. So all I do is naturistic everything, you know, whether it's being on our kayaks or being on the boat or the jet ski or longboarding, going on a bike, going to the gym. All I do is sit in the gym for 2 hours a day. I just enjoy moving and look at Mother Gaia for what it is, for sure.
Beautiful, bro. As we end the episode, I just want to give you the opportunity to give a last piece of advice, something that maybe has stuck with you over the last decade that maybe will stick with someone.
I mean, yeah, the same thing we spoke about this entire podcast is just simply data. You know, the thing that's pushed me from stopping over leveraging and over trading and doing things that are out of characteristic, which to becoming profitable, was just simply acquiring data based on one foundation, you know, whether that's support resistance or fundamental trading or supply and demand, sticking to that foundation and finding these minor nuances over a long period of time. And I promise, you know, when you have 3 years of trades underneath your belt, no matter who you're watching stream or what type of advice you get from other people, nothing is going to stray you from executing your system because you understand what it does over time.
Emmet, thank you very much for joining and sharing your expertise.
All right, brother.
Beautiful, bro. Great stuff.
All right, man. Awesome.